I might use this. I might use that, Emma.
Oh,
I said I might use that.
I just deleted that.
You talking as the intro.
That's okay. We don't need her talking.
You don't want the fans to know.
She in the shot?
No.
Okay, good.
No.
She doesn't need to be in the
Actually,
shot.
am I in the shot? Yeah, I'm in
I don't know. Are you sure you're in the shot? I feel like I'm not in the shot. My
50-50 shot that I'm in the shot.
50-50 shot. Why do I always feel like I don't talk loud enough?
Because I mute you.
Everything's
You're
amazing.
trying to start a show.
I'm starting the show.
I'm just joking.
My phone's gonna die.
We both. I dropped it in my pocket. I was like, whoa.
I think I'm ready. I wish this was like. I
How
like
come
had
you
it
don't have
like.
a pop filter anymore?
I never had a pop filter.
Never had a pop filter?
No, that was Mike. Ooh, speaking of.
I'll just steal his.
What's going on, everybody? What's going on, everybody? I'm Josh.Killian, and today I am joined with Gunnar Davis, who's currently getting a pop filter for his microphone. He's stealing Michael Murphy's. And you're listening to... He's stealing Michael Murphy's. And you're listening to the Trident Talk. And may I just say really quick that it has been a hot second, but we are back, baby. We are back, and we are excited because we have a lot of good content that's going to be coming out over the next coming weeks. A lot of great other type of content that we're going to be doing and branching out in as well. But we really wanted to come back in on this note because we have been busy in the seller's market, and actually that's kind of where our video is going to pick up because we're going to be talking about loans today and how they kind of feed into a contract and why certain loans might look a little better on a contract compared to others, because we've had a lot of clients ourselves that have reached out, that we're working with, and we're currently right now, you're bidding on a particular property and you're 5-10% over list price, and based off of your contract, there's a lot of different in your offer, there's a lot of different variables that play into why we're getting outbid, but they're like, why are we getting outbid on some of these? And a lot of that has to deal with some of the types of loans that the clients are getting, approved for and that they're submitting with their offers.
Yeah, it really does make a big difference. Like, just from VHA to conventional, just having one over the other can make a very big difference. Depending on, like, some people will even, like, the listing agent will show their clients, like, hey, they have FHA. We probably don't want to go with this one. Which is unfortunate.
Why? That's what
why?
we're covering
That's
today.
what we're covering.
Exactly,
yeah.
Because why? Why would an agent or why would a seller disregard an offer that could be 5-10% above purely based off of the type of loan that it has been submitted with the offer?
Yeah, because a lot of people, like, even if people have bought multiple homes and have had multiple loans in the past, they still don't even know what the difference between conventional FHA, why is one better than the other, what's a USDA, what's a VA, stuff like that. So that's what we kind of want to share our knowledge, so in the future you'll have your own knowledge.
What creates a strong offer right now in the seller's market and why? And of course, as we go over these loans as well, there's other variables that play into an offer, which if you'd like to see that, we would gladly, maybe even like inspections and stuff like that, we would gladly love to break down a video for you guys of why inspections could make or break a deal as well. Just as loans could make or break a deal, the price in which that you're offering could make or break a deal, inspections can make or break a deal. Today we're going to be covering the loans.
Right, because it's our job to educate.
Yes.
And I feel like people don't understand that we're not here to just get you from point A to point B. We're here to educate you so you can get yourself from point A to point B.
100%. And so we kind of have these listed pretty much by the most favorable and, majority overall most favorable from greatest to least, if you'd like to start us off.
Oh, yeah.
So what is one of the best types of loans?
Well, the best type of loan, let's say the best type of loan isn't even a loan. It's actually cash, which, kind of makes it... Well, so let's take conventional, which is next on our list. Cash, you just don't have to deal with a third party. Because adding someone else in a party just makes everything just so much harder.
It extends the process as well.
Yeah, exactly. I think you have to add maybe sometimes half of a month to your closing date, just because there's a loan in there compared to cash. Cash, probably more than half a month.
Depending on the circumstances.
Yeah, some cash deals can close within 2.5 weeks, which is crazy. You
But
can
actually, I think that was like one of our very first ones.
yeah,
That
it happens.
we ever had in real estate. Period. As a team, it was only like a 2.5, 3 week.
Well, I think it was
process,
supposed to.
not even.
I know that my first one was cash, and it was supposed to only be like, I don't even think it was 2.5 weeks. I think it was pushing the 2 week mark. Unfortunately, I had to get pushed further along because of complications, because stuff like that happens. But originally it's only 2 weeks, so that blows my mind.
Yeah, and that's usually the most favorable one, considering a seller is offering their house. Someone comes to them with a proof of funds or some sort of cashier's check that proves, hey, your house is being listed at 200. I have that 200 right here, right now. You can pretty much immediately just step over any of the boundary lines and go straight into the contract process.
And a lot of these are just based off of what's the likelihood of the deal closing. You always want to make sure your deal closes. So as we go down, we already mentioned cash, which is the king of all loans.
Cash
even though
is king, as some people would say.
Yeah, that doesn't really make sense for
It
the
can
loan,
vary
but
in the situation, but that's the phrase that goes around.
Oh yeah. Then we got our conventional loan, breaking down to our FHA loan, and then all the way at our bottom we got our USDA and VA loans. Now there's obviously more loans, and sometimes all this information we're about to give you is kind of different from person to person, but it just depends on your loan officer and you personally, financial wise. But pretty simple enough. So I mean, we don't really need to hit cash because I mean, like you said, cash is king. It's very simple, quick close, no third party, as simple as it can be. But I mean, you want to start us off on conventional, Joshua?
Yeah, so as far as actually getting lending and getting a loan, conventional would be the most convenient loan. Usually what happens with that is they have a higher credit score. The buyers that are presenting with the conventional loan have a higher credit score. Usually they have more upfront money, so that is going to appear as a stronger offer to a seller once it's presented. At least in terms of USA Mortgage, a 5% minimum down payment is usually what is due compared to like an FHA. That's more money in the seller's hands right up front. Currently, for you, USA Mortgage, the maximum loan amount is $548,000, so almost $550,000 that you can get approved for. Again, that's with your credit history, all of that good stuff. As far as seller concessions, as far as a conventional loan goes, 3 to 9% is what happens, or is what is limited onto the seller side.
Which I mean, that's pretty big vary. But talking about USA Mortgage, we actually want to give a shout out to our loan officer, Danny Hyman. He gave us all this information that we're able to give to you guys today in a very orderly fashion. So he does so much for us, and we appreciate him so much.
He's a fantastic guy.
And he really does care about our clients and his clients, and will do anything. He'll go the extra mile for them.
And so this is the information that his company actually uses. So it's not like, we're just pulling this out of, this is an actual loan officer's information, which is fantastic because, again, like we like to have the best sources possible for you guys because we really do care about giving you the best information.
And I think it probably varies state to state. I mean, I'm only licensed in Missouri, so
yeah,
that's my go-to, but it probably does vary, and I know USA Mortgage is a pretty big company, so but I mean, this is up to date in our area. I mean, probably pretty close to other areas too, but obviously it'll jump back and forth. But I mean, so yeah, conventional is that, let's say cash is simple, conventional is simple loan. So I mean, it's pretty nice. But I mean, moving down the list, we got FHA, which we kind of get into a little more government help at this point. So we have a third party, and then we're kind of adding another party with the government and within everything. So I mean, FHA, you only have to have a minimum of 3.5% down payment, which is good for a buyer. Max loan amount, we're about at the 356 mark, so almost 200,000 down from conventional. I mean, and then there's some special things with condominiums. With FHA, there's no income limits, which is nice. And then how we were talking about seller concessions, it goes up to 6% for an FHA, which I think FHA usually has the more. So like how we had conventional was the 3 to 9%. Usually that 6%, we're usually near that 6%, just because when you're FHA, that's more for first-time home buyers. A lot of time can use this, but it's just to help out because you don't have as much to put down. So that's kind of where it gets finicky, why FHA isn't as good as conventional.
Yeah, it leans a little bit more in terms of the buyer, and so when a seller looks at the contract, they're wanting to get the most out of their listing. So whenever you have something that favors the buyer a little bit more, it might not appear as eye-catching,
Right.
to the eye as conventional might be. Because like that 3.5% that's being used as a minimum down payment for a buyer is less money for the buyer, so it's like less stressful to put that much up front, but it is less money in the hands of the seller, so that might be a reason in which, some of your contracts or something like that, if you're using an FHA loan, aren't getting accepted.
Exactly. And as we go down this list, when the government's involved, usually it gets a little finicky because the seller's objective is to close. That's what we want to close with the most money possible in their hands. So with the government involved, it's sometimes with appraisals, it get a little more strict. It can cause the seller to have to do some repairs when they wouldn't have to with, let's say, conventional or cash. So just adding that government source in there is just kind of, it kind of makes things a little more difficult. Not saying you can't get an FHA loan through a contract, but it's just kind of, it's more difficult, especially in this market. We're usually not seeing FHA, which it's when we see FHA, we're like, wow, that thing went for FHA. Just, it's the market, but I mean, it'll come back. It'll eventually make its way back.
Oh yeah,
eventually. Hopefully.
Eventually.
Yeah, but I mean, moving down, we kind of got our USDA and VA, which are
the best for, I was gonna say, the best for first-time home buyers. Usually.
First-time home buyers and veterans, but I mean, it's just the more assistance you get, the less powerful your offer will be.
Yes, exactly. So unfortunately, that is the truth. In terms of USDA mortgage, though, that is usually fairly sought after with first-time home buyers because it requires the bare minimum and in some instances 0% down that you can get with an offer, or that your offer is being submitted with 0% down in a place. So of course that is fantastic for yourself if you can actually get accepted under that, because you don't have to have any money down if you're a buyer, but at the same time, for your seller, you're not getting that initial upfront cost. So no down payment required. The monthly mortgage insurance premiums, those can get reduced in some circumstances. It all varies kind of in your situation, especially this particular loan here. Like usually, there's like a common ground for conventional and the limitations and stuff like that.
Right.
USDA mortgage, they really kind of have to nitpick your situation specifically, especially when it comes to like the property as well. Because like on the other ones, usually there's a wider range of properties. This one, from what I'm aware of, it's really only on like residentials, some condominiums, but of course it varies and there's limitations to that.
Right.
Just like the income limits as well, the USDA income limits are subject to change, so that's going to have to be accounted for in terms of your situation. So of course you're going to want to get in contact with your lending officer to see, but that could be this particular loan could be the best for you financially if you're a first-time home buyer or something like that. You don't have a lot of money that you have to put up front, but you're wanting to get a property. But at the same time, you got to know that it's going up against conventional FHA. It might not get picked.
Right, and the last time I saw USDA was probably almost a year from now, mid 2020. I mean, it's been so long. I mean, it's so hard to get a house with, even FHA. I mean, things will change. I know they will eventually change.
Yeah, they will change. Just right now with the seller's market, it's
an insane seller's market.
Yeah, because we're not saying these loans are bad. We're just saying how right now in this market they could look not as appealing.
Yeah,
exactly.
Some are
to
better
the
than
eye
others.
of the seller. Exactly.
Yeah.
Especially right now when houses are only on the market 24 to 72 hours and they're gone. Not even at some points.
Just so many buyers that most likely one of them's going to have either.
We had an agent in our office who was selling her own house, or I believe it was gone by like day 2. And even in those short amount of times, they had 6 offers or something like that, but still.
Which, in this, for some reason, it seems like we think that that's not that much. Because we're hearing like things like 20 and 30 offers, but 6 is a lot of offers. 5 years ago, they would have ate that up.
Exactly. And so for that to happen within like 24, 48 hours.
That's pretty good.
That's pretty good. And to think like 20 to 30 within like, let's say a week, like that's you're pulling in like 5 on average a day.
Yeah, sometimes even a weekend, and you're just like, I don't even know how.
Yeah.
It's just we're hopefully heading in the right direction, but with the real estate market, we never know. But so we're kind of down to the VA, which is kind of very similar to USDA, I feel like. It's
more
just obviously
towards veterans.
Yeah, it's a veteran kind of loan.
Which is fantastic.
Just to be able to help our veterans kind of be able to get a loan, because sometimes since they're gone, they can't build credit like we can, or gain funds like we can. So a little nice way to kind of help our veterans. Obviously it is kind of that lower because it is government helped or funded, I guess. to help with that. So anytime the government, obviously that's another party, makes it difficult, but I mean, still happens. I think I just got client of mine approved from VA, so I mean, it's possible. We're gonna push through. Obviously, it's gonna be harder, but doesn't mean it can't happen. And I mean, it'll take time, but you just gotta push through in this market. But I think the most important thing to catch from here was kind of the order we did these in. I mean, we kind of gave some information, but always remember that cash is king, conventional is
Convenient.
Conventional is convenient. FHA, all right, you're getting
I was
there.
trying to think of something witty for FHA. Like FHA's
Fair.
fair. Okay.
FHA's fair.
That works. Fair.
And then USDA, VA is they're nice. They're
no,
that's just a lot of letters. So I mean, yeah. So I mean, we just go down by your list. I mean, conventional. If you got the money to go down and you got that good credit score, always shoot for conventional. If you go FHA, always ask your loan officer, hey, why didn't I get conventional? Because you want to make sure you ask that. Because I know some clients of mine have had that problem. Maybe FHA. It doesn't mean you can't get a house with FHA, but it's just not as strong as conventional, so you might have to put a little more into the house. And then your USDA and VA, which those programs are meant to help first-time home buyers and veterans. So, I mean, when the market kind of starts to flip around, those will come back more into play. But
when we get that spring inventory,
I'm so like you see it a little bit, but
barely.
Yeah, it's like barely. Like because
Barely.
everything, as soon as they come on, all the buyers are like.
Yeah, I know. It's crazy.
But I mean, I think that was pretty much it. I think we covered pretty much everything we wanted to.
Yeah, I hope that we helped shed a little bit of light on there. Maybe, we were like, oh, well, I'm submitting all these contracts. We've been to 20 different places. Why am I not, I'm submitting way over list price. Well, maybe it might be your loan. I don't know what the other stimulations are in terms of your contract, what you're asking for when you submit an offer. However, the type of loan could be a make or break for some people.
Yeah, type of financing is
well.
big. That's a big part of buying a house.
And some people, just like we covered today, want to know why.
Yeah,
why is my FHA not sought
as
after as a conventional? So hopefully we shed some light on that today. But thank you for joining us today.
It was awesome. We'll see you guys next time.
All right, see you guys next week.